Sup, you animals? Hope everyone's having a blessed Friday. Welcome, new members in Ghost Cabal. We're going to be growing the server a lot this year, so we're happy you're here. Alright, we're looking at ENA. So on the monthly time frame, you could see there's a lot of imbalance on the move up and down. It just shows you how violent and aggressive the moves are once a swing position is locked in. So if we pop this into the daily, what we have here is a bunch of failed swings. So basically, failed swings are just liquidity zones where people's stops are going to be below the low here. So you have stops here, you have stops here, and then ultimately below the external low, you have some stops. So what I see here, and big respect to Soul, he actually brought this chart to me. Man's an incredible trader. Follow him on Twitter. He's truly one of the best traders out here, totally under-recognized. His account should be at 100,000 followers, to be honest. Anyway, here's ENA. So you can see they took these stops over here, and then this one right here, they also took that stop right here. So we call this a high resistance liquidity run. It's basically taking out an external low with the bias being higher into this monthly internal imbalance. So they rebalanced this zone, they took out these lows. There's one more external low, no guarantee it's going there. But this is what I see on the high time frame. So if you plot a fixed volume profile for the entire history of the chart, this is called the composite volume profile. Your value area low is here, and you can see it's pretty reactive. We basically tagged it over here with that external raid at that high resistance liquidity run. So this is a good area to start hunting along with the idea that your stop would go below that low. And if it gets below that, it's probably going to be hunting the external low. But in this range, this is what you have. You have basically an accumulation zone here. It's not a long one, right? On the daily, this is only less than 2 months, but still valid. And then you have a manipulation into the external low. So essentially, this is the manipulation part of an AMD. It should always take out a high time frame liquidity zone or rebalance a high time frame liquidity range. In this case, it took out an external low, so that's why I would consider this a, where is it? A high resistance liquidity run. So anyway, the AMD is going to have an obvious accumulation range, a manipulation into a high time frame key level, and then have very obvious targets to the upside. So the footprint on this coin is really good. You have equal highs at 133. You have internal range failed swings. So if I drop this into the 4-hour, you'll see very clearly all the way up to these highs. So I only plotted it up to here, but technically this whole range is intraday liquidity that you're going to target on the reversal, right? So now that we have the high time frame model, this is our low time frame entry. So we'll go into the one hour. So basically, time frame align, you're going from the daily into the 1 hour. And what I usually do is plot out discount premium. So this is your swing low that took out the low. We don't have a swing high yet. So assuming that they take these highs on the next drive, your premium could be here, or maybe they take out that high and then drop it down. And then what you would be looking for is in discount, where is the liquidity and where is the demand? So if you look at this part of price action right here, you could see this cluster that built right before big displacement that displaced above those highs. This is an order block. So a lot of people, they mix up what a true order block is. It should have displacement that shifts above a previous high, shifting the order flow. but also it should have a very obvious range or consolidation before the move. So I would say this cluster right here is going to be a very good target. And then inducement is when you have liquidity right above your order block. So what it is, it basically stops, like it decelerates price when it comes down. So once they take the liquidity, there should be resting bids waiting in here. And then the idea would be these stops are getting triggered into resting bids here. Positions are getting filled to go long. And then you just want to be on the right side of the move. So ideally, this should always be in discount. It shouldn't be in premium. If it's in premium, it doesn't mean it won't work, but it's a lower probability that it'll work. And then just like on the composite volume profile, I'll plot from the last origin of the swing high into the range. And you can see this is your value area. This is your value area low, high, and point of control. These are all dynamic pivots within the range. So it's never exact, but it just says that there is a good volume range over here. And typically, before it leaves the range, it likes to retest the point of control or the value area low. In this case, I wouldn't be trading the point of control because it's too close to the value area high and it's in premium. I would wait for price to come back into discount, taking out the liquidity target, and then tag this value area low. And then here, you want to see the bounce. Everything kind of lines up there. And I bet if I plotted a anchored VWAP, there it is. So it would also be lined up, meaning the fair value is basically in this range, right at that low. So this will be the entry model. And then high time frame. You know, if this does play out, your targets are going to be this monthly internal range. Remember, on the monthly, this thing usually either melts up or it nukes into the equator. So this area right here should be an interesting draw on liquidity. It's a huge monthly imbalance. So from entry to the top, it's a 35% move, right? So this is a very good draw on liquidity. Intraday, we went over this all the way into these highs. There's daily imbalance up here, equal highs there. So this is going to be basically your entry is going to be somewhere here, and then your larger entry, once the AMD is confirmed, is when the accumulation lows are reclaimed. So the idea is you would take a smaller position down here, and then once you have certainty that they've reclaimed this level, which right now, any price action that goes into here could just be a bearish retest, right? So if you're below this accumulation low, what it could do is just go into there and then make a new low. That's why you go in with lower position size here, and you wait for this reclaim to actually add real size, because now you have a discernible stop and the order flow is aligned with what you're trading into the distribution highs. So that's ENA. Thanks, Saul. Appreciate you, man. Cheers, boys.